This is Sherif from Turkey.
I'm Mohammed Amin. I'm an attorney here in New York and New Jersey. I specialize in real estate.
You have a beautiful office.
Thank you so much. Thank you for coming.
How is the business in New York? And you are also focused on real estate part, I guess.
Yes. So business has been very steady. We just, had our presidential election, and there's a boom. That's expected next year. The Fed has been cutting rates for the last 2 quarters. They're expecting to continue to cut rates again next year. This is directly actually impacting the prime rate, which is tied to the construction loan rates that banks are giving to the developers. So
generally, you do the constructions in New Jersey?
Yes, we do actually in New Jersey and in New York. We represent a lot of the larger developers in both states. We represent them when they get their construction loans. We also represent them when they do their permanent financing once they stabilize the asset and have it fully rented.
Let's say a developer wants to enter New York market.
Yes.
Or US market.
Okay.
So what should be the entrance ticket of the budget to purchase the land? Do you think? And it will be a nice size of a project to make it profitable and test the waters.
Yes. So New York is actually a very unique market. So in other states, including New Jersey, you analyze the value of the land by the cost of the approved project. So for example, let's say you're on the coast in New Jersey overlooking Manhattan.
This is what I want.
Yes.
Because I'm coming from another country and I would like to make something with a view, so less risk for my
Correct. That's the less risky. So somewhere, if you're on the water, immediately on the water overlooking the city, you're probably looking at $125,000 maximum per approved unit. So let's say you have 40 units, you multiply that by 125, it's around $4.8 million for that. If
I enter with $5 million, I can purchase a land to build 40 units.
Correct.
With a water view.
Complete unobstructed water view of the city. Yes.
How long can it take if we be realistic for the approvals?
The approvals generally take anywhere from 6 to 12 months, depending on the appetite of the town. Obviously, if you're in an area where there's a lot of development, there might be a backlog, right? But if in towns that are smaller, so the good part of New Jersey is that there's a lot of municipalities. So a town could be maybe 1 mile only. So it's smaller. So even though there's a lot of development in surrounding towns, it won't slow down you getting your approvals in a specific town.
So we can say maximum 18 months.
Maximum. But, somewhere between, I say 16 to 18 months. 18 months is if you're being overzealous and asking for too much and the town pushes back. So you have to go back to the drawing board, make the project a little smaller, then come back to the board.
After all approvals are done, what is the amount needed for a developer until they get the finance support from the financial instrument?
So if the investor comes and purchases the land free and clear, they would spend, let's say, another $300,000 to $500,000 in legal fees
and
architectural to get the permit sets, get the approvals, then get the permit sets. Once you get your permits, then you can go to the financial institution and get construction financing. And generally, the banks would lend you 100% of your budget, or sometimes a little bit more.
For a new company, they do the same as well, like they come from.
Yes. So
there is no track record.
So they want a track record as to who's going to be doing the development, obviously, right? You could be a new company investing, but if it's your first project, they don't want to see that the principals of that company are the ones who are actually project managing. So if it's your first project here in the United States, what we do is we team you up with at least a construction management company or a project management company that would take, maybe 3% or 4% fee, and they would basically assist you in project managing. So, some investors want turnkey. We'll put them in touch with a builder who would come in, or a project manager who would just take it A to Z. If the principals have, let's say, development experience from overseas, because the developer's overseas, it could be a hybrid model. But the bank would want to see that we got someone with a track record here in the United States as part of the project.
After we get the finance from the institution, in what point we can use this finance? Immediately we can start spending?
Immediately. So
until end of the construction, I don't need to sell the units.
Correct. So generally the construction financing they give it for up to an 18-month term with built-in extensions. If you need to extend it while working on your permanent financing, you could pay a fee to the bank and they'll give you an extra 6 months or a year. But generally, the initial term is 18 months. So what happens is when we get the construction financing, we give a budget to the bank at the start of the process. The bank holds on to this budget. And now let's say we go and we start excavating and do the foundation and we need $1 million. So we have this form which has all the line items, and we basically check off, hey, we just did the excavation. We said it was going to cost us $200,000. We did the foundation. It was going to be $800,000. We, put the block or the concrete and we poured it, and, it's $500,000. We check off, they call it a requisition form. We send it back to the bank. The bank then contracts with a inspection company that comes out to the site with the construction budget and what we're asking to get released. And they'll see the job is done. They'll check off. They'll give the report back to the bank, and the bank then wires you the funds. That process takes maybe 3 days.
What is the interest rate this bank gets?
So the good thing, and this is why I said, business is going to get stimulated even more in 2025, is that the construction interest rate is a floating rate. It's not a fixed rate, and is directly tied to prime. As the Federal Reserve cuts the interest rate, prime immediately goes down.
Amazing.
Immediately. So the last 2 cuts cut 0.75%. So we were looking at 8.5% at prime. Now we're looking at 7.75%. And they're predicting that it's going to get cut further. So if you're a builder, let's say we close the loan today at 7.75, and then on January, the Fed cuts it down to 7%, your interest rate goes down to 7%. And that's going to help stimulate the economy. It's going to help stimulate development. And that's why we're expecting there's going to be a flood of supply in the next 2 years.
So let's say we invested $5 million on a land and we get the construction loan of $15 million.
Yes.
And we have approximately 12-13% of cost for the 18 months term, additional to the construction cost as a finance cost.
Correct.
So which makes us being on the safe side.
Yes.
So in what point generally New York developers are starting marketing and selling their projects?
They generally immediately after like completion, because there's probably like a 2-3 months period after you're done with construction where you're just going for inspections to get the final certificate of occupancy. During that time, you can begin to market, whether for sale or for rent. Generally, obviously, when you're in the desirable areas by the water overlooking Manhattan, it makes sense to do condo and then sell it because people are paying a premium. Sometimes for 1-bedroom apartment, they're paying $1.5 million or even more. The more amenities, if there's a pool, there's a tennis court, the more amenities you give them, the higher of a purchase price they pay. And obviously, if they have a direct view or a panoramic view of the city, they're paying a premium. If you're further away from the water, then you have to do an analysis. You're still making good money on the sales, but you have to do an analysis whether it makes more sense to rent it and then stabilize the building, and then you can sell it as a fixed income-producing building.
After handover date, I need additional 6 months to 1 year time from the bank to give us time period to...
So there's 2 ways about it. So if you're going to be renting the building, generally you have to wait until you rent 90% of it and the building is 90% stabilized, and then you can go back to the same bank or go to a different bank and shop the rate and then get something called permanent financing. Permanent financing, you can get as low as 5.5% interest.
Wow.
Yes. So amortized over 30 years. So
I can keep all the building and paying the installments?
Exactly. So let's say you rent it out. You now have a construction loan at 7.75%. Once you get to 90% stabilization of rentals, you can then go back to the bank and then get permanent financing for up to, close to 5.5% to 6% interest, and then just basically collect rent and have it as an income producing asset. If you now want a condo and sell, there's no point to get permanent financing. So what we do is we have a price. We make an agreement with the bank. Every unit we sell, they need to give you a release of lien. That way the buyer can get clear title and purchase the property. So we negotiate a release of lien amount. So let's say the loan's the $15 million and there's 40 units. Maybe they'll say, for us to release a lien against 1 unit, you got to give us $500,000. So we have a fixed number. We get a partial release payoff letter at closing. We pay that. We get a release. And then we keep doing that until we pay off the entire loan. and then the developer makes their money at the end. So the first people that need to get paid is the bank, and then the last few units, that's when we make the profit.
The system which you are telling right now to me is so convincing to make a development here, because the system is so easy and doesn't push you to sell all units. You can sell half, keep the other half, and rent it out.
And some developers do that. Maybe they sell enough units just to pay off the loan, and then you take your time. You know, maybe if you feel the market now is going to get hotter in a year or two, you can elect to rent it for a year or two, and then put it back on the market when the prices go up, and you make more money. Because at that point, you no longer have debt, and you could actually finance the remaining units on a perm and to get the lower interest rate as well. So you have multiple options on the condo for sale.
What is the construction cost in the per square foot in general average?
It's somewhere between $180 per square foot to $250, depending on how high end you want to go. You know, if you're putting like high end finishes, then obviously you're
social facilities.
Exactly. If you have facilities, you have now a swimming pool. You know, that's going to obviously contribute to the cost, but the right number is somewhere between 180 to 250.
I guess parking is not must in the New York.
It depends, right? Some towns are more stringent on the parking, but you know, one of the rules of thumb actually. So they generally want to see, you know, close to 2 parking spots for every apartment. Obviously, we don't have in the areas that are close to the city with the view, land is very expensive, so you don't want to use it for parking. So a lot of the towns, what they're doing is they'll permit you to do a 1-for-1 ratio. But one trick is that once you get approval to build a high-rise, the entire parking analysis changes, and they consider it like a commuter type of development, and the parking ratio significantly goes down. It could be almost half a spot per apartment. So when you see it in downtown Jersey City, you see all those high-rise buildings, they don't have enough parking for those units. But you know, because it's a high-rise, they call it the residential standard for parking in the state of New Jersey is different for high-rise versus mid-rise versus, you know, low-rise. So if you're going to do like a 10-story building, you don't need that much parking. You just got to get a town to approve it.
What I have seen last few days in the New York City market in Manhattan, the market is a little bit slow right now on the sales side.
Okay.
So what is your opinion right now? Is it the right time to start development and purchasing land and starting the process, or do you think investors should wait now?
In New York, in the ultra luxury market and the high end market, it's tough, right? Because now your buyer pool, like if I always tell a developer the rule of thumb, when you go to an area,
and the carrying costs are so high in the city.
Exactly, because they're more expensive. Because now the construction cost in Manhattan or New York City is closer to $400 per square foot. It's double whatever it is in New Jersey, number one. So it costs a lot more money. If you're trying to sell it for a lot of money and you're at the top of the market, it's going to be tough because there's not that many buyers. You know, so now you're not marketing to the masses. You could be in an area where a property is selling for $3 million, but that's the average price of the houses there or the apartments. So you'd sell it quick because people are there. There's a big buyer pool. But when you're in an area that's, you know, averaging $3 million and you're trying to sell for $6 million, you know, we consider that a unique product, and you need to have a unique set of skills because we've seen it happen. You get some developers, I call them, you know, they're developers / artists because they have a vision and they build jaw-dropping projects. When you have those type of finishes that you have the creativity behind it, you're almost like a designer finish behind it. Someone with a lot of money falls in love. They'll come pay premium, and those things fly off the shelf. What happens is now other developers see, oh, this guy just sold it for $6 million. Let me do what he did, but they can't replicate it because those developers, like I said, they have a unique set of skills. They have like a vision, and they're actually very secretive. Like when you actually want to go show their projects, they don't want anyone coming. They want to make sure you're a legitimate buyer. You're not a competitor. They actually screen the realtor and who's the buyer, you know, before they even let you in because they don't want people to come in and see their finishing, their tiles, their kitchen, their touches. And those touches are what helps those developers sell at a premium. And unfortunately, not everyone has that touch. And, you know, the tastes of the higher end community changes, you know, year by year. So if you're out of touch, it could be a situation where you lose a lot of money. But if you know what you're doing, I've seen it where they're making millions of dollars. Like you'll see where on a single project, let's say a house, a single family unit or a single house, they could make multiple millions as profit.
Let's say I put $5 million on a land,
Yeah.
and I spend additional $500,000 more for the architect and the licenses approvals. 18 months is the approval time period maximum, and 18 months for the construction period. Plus, I have additional 1 year for the selling the units or renting out the units.
Okay.
Let's say we are selling all units. So we have approximately 4 years we spent, and the invested amount is $5.5 million from our pocket.
Yes.
What is the exit amount, do you think? What might be the after 4 years profit rate we are getting?
So the profit rate, if you look at the project as a whole, right? Let's say you didn't get any financing, and you went in all cash, and you're in it for 20 million. Your profit rate is going to be anywhere from 26 to 30 million. So you'd be making a profit of $6 to $10 million.
Around.
But the power of financing now, in reality, you only have $5 million of your own money, because the bank is basically your partner. In that case, you're looking at almost, generally if the project is underwritten properly and you properly use financing, you should be making somewhere between 80 to 200% return on your money.
Wow.
If underwritten properly. So like in a situation where we did the 40 units, let's say the projected profit's close to $30 million, you can make $10 million profit on a $5 million investment.
It looks so promising.
But you also have to factor in the time value of money. So let's say the project takes 4 years and you've made 200%. It's per year, 50% return per year.
Which is also amazing.
It's amazing still, yeah. So I like to keep things in perspective, so people don't think that I'm going to make 200% in 1 year.
Even 80% is nice.
Yes.
Yearly 20% profit.
Yes.
Even you make hard jobs, you cannot make this.
Exactly.
And you're making with this dollar, like.
Exactly. Yeah.
I'm coming from a country, there's a high inflation rate.
Yeah. And we're having a little bit of inflation here in the United States as well. So you also have to factor in, like if we do a project where we only make 20% return, inflation has increased significantly in the last 3 years. Ever since COVID, just to give you an idea, on a project, the 6,000 square foot townhome project, the lumber used to cost us $60,000. During the peak of COVID and inflation, that same lumber was costing us $130,000. So it went up more than twice. Now it's kind of stabilized a little bit and went back down, but we're still closer to $100,000. So even, I know we've had a little bit of relief since the peak of COVID. Overall, the inflation is up significantly. We're almost up like 60, 70% on these building materials. They haven't gone back to where they were in 2020. So what that has in essence caused is that now the construction cost goes up, the sale of the end product has gone up. So the units that we used to sell for, let's say, $850,000, now we're selling for 1.2 million, 1.3. People then think that you're an investment genius, but at the end of the day, you got to look at what has transpired with the inflation. So it's also inflation protection built in there, but it's still a good profit.
In the end, you're creating solution. Housing is a big need for everybody.
100%. And you know what? If you leave your money in your bank, it's worth 60% less anyway.
Yeah.
So it's better to at least have it in a vehicle,
of course,
that's protecting you against inflation.
Thank you so much today.
You're
welcome.
Got
an amazing information.
You're
I
welcome.
believe we will do the second and third times on our trips. I got a really good information from you.
Thank you so much, and thank you for joining us.
Thank you.